Raising tariffs on the EU was yet another fake out, and the 13th Circuit Court of Appeals has moved to block all of the reciprocal tariffs. But tariffs aren't the only way to fight trade wars, and after Friday's close, new sanctions against China was announced. So, will the onslaught of fear headlines ever end, and does that really matter to stay on the right side of the market? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll go over all of that and more. So let's get into it. All right, so starting off with SPY here. So we really just spent the week balancing, and if you'll recall, we talked about the potential of seeing further daily balance. Not on these weekend videos, but in our chat room on this day, because that was a Thursday the 15th. Because on Thursday the 15th, what happened was the Qs made a higher high and just didn't really see that much follow through. So after all of this range expansion to make a higher high with just no follow through at all, greatly increases the potential that we are setting up for some further daily balance, which has been the case so far. So first things first, let's just talk about the tariff situation. So the EU tariff situation that was announced like Saturday, and then by the time Monday came around, that was off the table again. So just another snip snap moment. And now the new headline to be concerned about potentially on Monday are these new sanctions. So again, should we care about these headlines? Yes and no, right? Yes, in the sense that they do cause short-term volatility. They very often will, inspire, especially when so many of them are announced after hours, and so typically, you can move the after hours market much more easily because there's a lower volume. So, it tends to create some short duration volatility, particularly from close to open. But as we've been talking about ever since this big old move, markets have the propensity to climb a wall of worry. And so are we continuing to climb that wall of worry? As you've, likely recall from prior videos, yeah, right? As long as we're holding over this guy, 570.31, then the market's just going to keep climbing this wall of worry. Again, as long as these fear headlines do not create meaningful change, right? So it's on the sellers right now to create meaningful change. If they can't do that, then the buyers are doing just fine on a daily time frame. Now, that being said, we do have to be mindful of the fact that we are currently bumping our head up. The buyers are currently bumping their heads up against this all-time high supply, which is exactly where these buyers had problems in the initial breakdown. So essentially, all of this balance right now is a battle between these two structures: this all-time high supply and this demand zone, which was essentially the demand zone that was holding all the lows following the election reaction, right? So here's the election reaction: this gap up, hold the lows, hold the lows, hold the lows, hold the lows, battle for it over here. And so that's pretty much it. Another way of looking at it is that we're trying to hold this 310 to 42 structure over here, right? So this is the structure that's best acting as a proxy for the July 2024 high. And you can see the high of this balance is pretty much roughly the lows of this structure, and the low of this balance is again roughly the high of this structure. So it's anybody's guess how this structure breaks, but as of right now, because we're still holding over 570.31, these buyers are still constructive. Additionally, this was very notable. This is a scam. It's not real. It should look like this. That actually is wrong too. There should have been some corrective activity on this gap. That's weird. Here, let me just show you SPY's low time. There should have been some corrective activity here to fill this gap up on Tuesday's open. But what is notable is that here's the gap from Tuesday's gap up, and the lower low on Friday filled some of the gap, but couldn't fill it all the way. That's very notable. It just suggests as weak selling. Same thing happened in the Qs, right? They came very, very close to gap fill. Gap fill is at 511.84, and the low of the session was 511.93. So they missed it by just under a dime. And then same thing for the rut. The rut should be the relatively weak one. You would think that they would try to fill the gap here, and again, they missed filling the gap. So, of course, the buyers are not out of the woods yet, right? We could very easily see further downside on Monday, but as long as that gap remains unfilled, just like over here, this incomplete gap fill was very bullish. It's the same deal. Just like this unfilled gap is bullish, right? Because it just means that this was a notable change that hasn't yet been negated. Of course, you can make the argument that if we get a lot of gaps within succession, then eventually the market should try to repair those gaps. That's true as well, but it's never a guarantee. Like, nothing has to happen in the market, and we just take it one day at a time and use the references that it's in front of our faces right now. As long as there's incomplete gap fill here, which again, it's not being shown properly right now on this chart, and incomplete gap fill here. Okay, so incomplete gap fill here is obviously short-term bullish, right? And then longer term would be this guy, because if we don't fill this gap, then of course we're not finding acceptance in this demand zone. If we're not finding acceptance in this demand zone, then we're just bouncing sideways over prior demand. That's constructive for these buyers. Now, from a seller's perspective, the sellers did play defense where they had to. Here's this little 3-day supply sitting at the high of this big old range, and you'll notice that the point of control, 593.06, is pretty much exactly where these buyers ran into problems. Now, that being said, like I said, the incomplete gap fill is a good look. So next week, if these buyers can prevent further gap fill and then find acceptance over 593.06, that's pretty much the best case scenario for these buyers. And holding over 582.52 keeps these buyers positioned well to keep chipping away at all of this supply over here. Okay, 582.52, just the point of control of this guy over here. So buyers are doing fine. And the fear headlines, again, if they don't create notable change, it doesn't really matter, the headlines. They can keep coming. It's all about these levels. As long as these levels hold, you just play with the direction that the daily, if you're a daytime frame operator, you play with the direction that the daily chart is moving in, you know. And even if you're a swing trader, it's just easier to go with the overall market. Okay, that's pretty much it for SPY. Moving on to the Qs here. So the Qs, I don't think we had a trade zone, but I'm pretty sure it was based off of backtesting here, so it's not in play right now. Moving on to the Qs here. So Qs, again, had a higher high lacking follow through. Not a good look, but at the same time, incomplete gap fill, very notable defense. However, high of the day at the value area high of this local structure right now, that's currently the problem for buyers. There is space for higher lows, where we're potentially just setting fast higher lows here. If on Monday, we can see a break over Friday's high. So for the Qs, that's 520.68. For the SPY, that is 591.13. And that's really, there's not really much else to say. Nothing really changed. They're pretty practically just, you know, we just trade sideways for the most part. A little bit of a higher high here, like in follow through, it's not the best look, but at the same time, the sellers didn't really press the issue either. We'll just have to wait for more information. We're just pretty much, you know, trading sideways for quite some time now. And the key levels that I'm watching for as references is the high of this structure, the 1121.29 structure, sitting atop the July 2024 high. So basically, if you can't trade through this guy, then you don't get to the July 2024 high. If you don't get to the July 2024 high, then this breakout over the 2024 high, of course, continue to be affirmed. And you'll notice they missed that too. So not only is it incomplete gap fill, but they also missed testing the high of the 1121 to 29 structure. So these buyers are positioned well to continue chipping away at this all-time high supply as long as you're holding over this fellow over here, which is the case right now. So that's really it. Same dealio for the Qs. You're probably, didn't pull back into, basically we're looking for a back test of this fellow and this structure, and that just hasn't shaken out yet. So we shall see. Moving on to IWM. Rut. The rut, again, like it's also very notable to not fill this gap. This should be the weak sector, and it's not really showing you that much weakness. It is showing you relative weakness, of course. There is much more overhead supply compared to the ES and the NQ, which is why, you know, the SPY and the QQQ, which is why my sales have been focused on the ES and on the rut. But still, you know, you can't be too happy with this, right? Like, again, incomplete gap fill, didn't really drive under this point of control today. Not the best look. Space for a higher low over 199.65. Key daily lower high resistance is, of course, 208.03. And we just need to overcome this little bit of supply for these buyers to, you know, get really press the advance again here. They never took out this demand either. So even though there is overhead supply, for me, you know, a breakdown from overhead supply is a good start. It's a start from the sellers, but you still have to take out demand in order to press the advance as a seller. And as of right now, that hasn't been the case. So that's really it for the rut here. Still just struggling with this 3-4 to 4-2 structure. So if higher highs next week, eyes on 207.08, and then the high of the range, really the local range now, 210.13. Downside reference, of course, going to be the value area low here, 200.29. All right. And then moving on here to the Dow. So the Dow also not entering our trade zone right now, just hanging out. Again, spent the week pretty much just balancing, trading sideways, inside bar, very indecisive week, chipping away at this supply here. This is essentially the equivalent to three of these guys. This guy for the SPY, this guy for the Qs is essentially the same early March to early April structure. So it's kind of like the rut in that it's still trying to resolve that structure. All right, so daily high low has already been set at 418.58. So we are now looking for the potential of acceptance back over 425.22 if these buyers compress the advance next week. Again, incomplete gap fill. So this is weak selling to not fill these gaps. It's very notable, but still just balancing. Yeah, so really just a whole week. I mean, look at these four. Nothing happened last week. It's pretty much. So anyway, no change on the Dow either, but holding over 416.55 is definitely a good look. And the key upside reference is going to be 425.22 and 429.58. Moving on to the dollar. So I continue to maintain this is a very reasonable place to be looking for trade on the dollar. Obviously, it's not shaking out so quickly right now, not the best look. However, still very reasonable to be looking for a lack of acceptance under here. If lack of acceptance under here, then these buyers should try to rotate to the highs of all of this range over here. Pretty much the opposite of what happened over here. This was a breakout over this key supply, no follow through, come back and test the lows. This is an attempted breakdown out of this demand. If there's no follow through here, these buyers are going to try to take it to the other side. So, and if the 13th Circuit does so right now, the 13th Circuit said those tariffs are not legit, and the Trump administration, they made an appeal, as they do, and so now it's up to the Supreme Court. The Supreme Court does not have to take this case on, and I think they're out of session until June, I think. Um, okay, I thought they would just be a pretty easy Google, but apparently not. I'm pretty sure they're out of session now until June. Um, anyway, they don't have to take it. They could just, say no, the lower court, whatever we agree with the lower court, or let the lower court handle it. If that's going to be the case, then the threat of these like tariff trade war situation likely subsides a little bit here, which then probably would put more confidence in a dollar. This is I'm speculating right now, but that would make sense. And as of right now, there's still lack of acceptance under 98.8, which is this low over here, this lower low under this low that didn't see follow through. You can see how it comes back into play over here, and it comes back into play over here, and intraday over here as well. This is the key. This breakdown is not firm as long as under 98.800. And as of right now, it's still just a battle for this key demand zone with its key point of control at 99.800. So I still think it's a very reasonable place to be taken for trade. It's certainly making you wait. If you want to use this trade zone and not just like come into it blindly, you can just wait, for like a big old move over the point of control, and ideally see some kind of like pass back over play, buy the pass back over, stop under local low, chop it up at the developing value area high, again at the low over here, and then try to see if you can hold the rest into this prior low and then to the other side. So you don't have to just use these levels blindly. I typically don't recommend that. I typically recommend you trade your own edge when the price is in these trade zones. That tends to shake out better for most people. Alternatively, just wait for there to be like hourly extension in the trade zone, because these are always looking for daily pivots, almost always. So if you have that confluence, then you can just start coming into the trade, especially if you're like more of a position trader and you manage your risk with your position size. That's fine. So that's pretty much it for the dollar. Moving on to NVDA. So NVDA greatly surpassing the targets. I don't know where our nope. Yeah, greatly surpassing our target. Where are my drawings at? Where the heck did my drawings go? Okay. So greatly surpassing our target now, flirting with the test of all-time high supply. Technically, pretty much rejected from the value area low of the all-time high supply. At this point now, you can walk your stop up. If you any initiations from here, you can have your stop up to under here, right? Because this daily trend is doing fine as long as you're creating areas of demand and breaking out. And if you take out this area of demand, then this daily trend is being threatened. So any runners that you have from this trade zone, of old, I would walk it up to under this low here, 129.16. There's a ton of space for potential weekly higher low over, I don't really care about this dinky one. Anything over 86.62 would consider good for a weekly higher low. But, this is the potential of just for further balance. That we could easily just continue to trade sideways for quite some time. It happens very often where NVDA will just kind of trade sideways. Obviously, the like the context was a little bit different, but still, price is price. And that's just how the markets are markets, and that's just kind of how it has to go. After a lot of range expansion, you should see balance because that's just how it works, right? The market wants to find areas of balance because the job of the market is to distribute goods effectively. And so, in order to do so, it needs to find a fair price to do business. And once it finds a fair price to do business, it wants to stay there until you run out of people who are willing to conduct business there. And then it's going to go look for the next area of fair price to do business. That's just how it goes. Um, anyway, so this is a pretty sweet trade, but whatever. At this point now, a runner, you're looking at 50%, 40% gain, even if you're stopped out of it under here. So yeah. And if you are interested in getting these kind of trade ideas sent to you every single week and updates from me and Dan, if you're like busy, right? If you're busy during the week, you're a swing trader, you got a job or whatever, and you don't want to scout trades, let us scout the trades for you with the swing report. Links in the description below. Check it out. And that's really it for NVDA. Nothing else. I think you can continue to recycle the zone. Honestly, if you come down and get extension into this area of demand again, just like it worked once over here, the market's already affirmed how meaningful this structure is. So if you get all the way back down here again, I think very reasonable to be making this same exact plays in this area. That's it for NVDA. All right, so for Bitcoin, this is not a great look for Bitcoin, right? Bitcoin pop above the January 2025 high, no acceptance, lower high off of it again for another pop and drop. And now you're back in this area of local daily demand. Obviously not a good look for these buyers. And these buyers don't negate the change of this breakdown without acceptance back over 106,632.35. The next objective for these sellers should be here, 101,946.20, the value area low of this structure. And as long as we're holding under 105, let's just call it 105K, then the odds of us continuing to balance within this guy would increase. Now, that being said, there's a lot of space for a weekly higher low, a ton of it. Anything over 74420.69 will be good for one. But on this retracement, you really don't want to see price get back under the low of this structure, right? Like that would obviously not be a good look. Ideally, they'll hold over this point of control. Like if we were to highlight all of this, the POC is probably roughly 96616. And so on this retracement, you don't want to lose this area of high volume if these buyers are going to be able to set a healthy weekly higher low. So I would pay the most attention to this level over here. Matter of fact, let me just see what it looks like right now. Yeah, it would be that level. So this is really the key level here, right? If we're going to set that weekly higher low and be positioned well for potential higher highs, then 96616.71 is going to be super, super key, right? And if you're still in from a runner over here, you should just have your stop under here and just stop it out if it gets taken out. And then if anything, we can reinitiate somewhere around here, no problem, right? So for Bitcoin buyers in the short term, something like this, I don't hate that. I don't hate that at all. Just plan to get back here initially. It's 2.8R, not bad at all. So anyway, that's pretty much it for Bitcoin. And then move on to Ethereum here. So for Ethereum, I really wouldn't be surprised if we retrace on Ethereum, right? These higher highs lacking follow through, stalling over here at this supply over here. And if these buyers are going to stay constructive relative to this breakout, they have to hold over this structure. So it's a good amount of risk, but the R is good. And the logic, I think, is sound, right? If you want to we want Ethereum to hold on to this guy, hold on to this guy to affirm this breakout, hold on to this guy to keep maintaining this kind of balance. Maintaining this kind of balance in here should have the next objective be here, and then the ultimate objective for balance plays at least to be up here. Okay. And then finally for uranium here, no change. I still think this is a very reasonable place to be looking for trade. Essentially just looking for this fella to hold, just like it did over here, over here, over here, just like it held for sellers over here, just like it held for buyers over here. That makes the most sense to me for uranium. So I really have no further comments really for uranium either. Just looking for that weekly higher low. And if we are going to set, it's kind of like Bitcoin. If we are going to set this weekly higher low over 1950 and have it still be healthy, you just don't want to lose the middle of this range essentially. That's it. All right, so for trade review, I think the key idea for me for the 528 session at least is to just know like what you want to see in order to flip your bias, right? And like I think one key idea too is like you don't have to take every trade. Like if you are a day time frame operator and you want to just always play along with what the daily chart is affirming, so for example, if you are a you're a bull in SPY, right? Because as long as the daily chart is holding over 570.31, then these buyers are doing just fine on the daily time frame, and so you want to stick to buys. That makes a ton of sense. However, you would like everything to be aligned properly, right? So you're only going to look for setups, session to session setups, then when price is over the prior session's point of control, because then you know that the day time frame buyers are also affirming the daily buyers, right? In a sense, essentially the daily move is being affirmed by day time frame buyers is a better way to say it. So I'll just show you what I'm talking about here. So if that's going to be the case, then as soon as you see this breakout on the 12th, then you're only going to be a buyer. So how do you pick location after the 12th? On the 12th. All right, so you say, all right, I'm going to only go with buyers as long as they're breaking over this area of demand, which has been the case throughout all of this. And so on this day, strong open, you don't come back down to the value area low. This is a reasonable place to buy that pass back over the open with your stop under the low, and then just aim for the next area of structure to the left here. That's fine, right? The next day, you don't really get a setup. You get to open over the point of control, so you're either making plays on the back test, right? So you're buying the pass back over, throwing a step under the low, assuming that that's good R, which it kind of isn't, I don't think. It's not really great R just to get to the value area high, so maybe you just pass on that. That's fine. And then on this day, you don't do anything, right? Because you're in the morning, you don't do anything because you're still over the point of control. Once you get back over it, okay, fine. Now you can be looking for these higher low plays, although honestly, it's kind of tricky. This is a great day for that, right? You buy this pass back over the point of control, right? But it's a stop out. It's probably a chop and stop, but the first chop is already good R. Let's say it's a sloppy entry. You're playing to the value area high. That's 2.5 R. Great. Stops out. Bummer. You run this play again, pass back over the point of control. At this point, maybe you pass this 1.2 for R, maybe you pass on it, whatever. You still walk away with something. On this day, you don't do anything until you pass back over the point of control again, and you don't really get a setup off of it, so you have to use like a Depot play or whatever. That's fine. That's kind of outside the scope. Either way, the idea is that's how you filter. You don't do anything this day because you're under. You don't do anything this day because you're under the point of control. Yesterday's point of control. You don't do anything this day because etc. And then same thing here. You don't do anything, and that's fine. You don't have to do something every single day. On this day, again, the R is not really great for that, so maybe you pass. Find the pass back over here. Again, the R is not great, so maybe you pass. Again, you don't have to trade every day. It's totally fine, etc. So that's fine. And so if on these days where you don't get a nice clean back test of the yesterday's point of control, what you can do is shift to the developing point of control and then look for a higher low play. So over here, for example, all right, well, you don't get this play because you don't do anything because you're under the point of control. Then you could do this pass back over the diva. It's a chop and stop probably. And then another one here on this. These are the 15. This is the 15. So it's not the best, not very detailed. Hang on a second here. Where's the 12? Okay. So on the day where you open under, so for example over here, okay, you don't really get a good setup off of the yesterday's point of control, but you can buy this pass back over this here, right? Third stop under here, target, even just the point of control of this structure. If that's not good enough R for you, fine, you pass. On this pass back over the point of control, that's fine, right? Third stop under the low of this guy over here, and you try to get to the diva, that's pretty good R. On these days, you can do the same deal. You'll buy the pass back over the depot, stop under the low, try to get to the diva. Very low risk here, very low risk here. That's totally fine. And that would have been a banger, right? Like this is totally great. Pass back under the point of control. You buy the pass back over. It stops under the low like this, right? On the 1 minute chart, there's probably a higher low there. Try to get to the diva. I mean, yesterday's value area high, that's 1.8R. And obviously you see way more follow through than that. So it doesn't have to just be on yesterday's point of control. This is, again, is a pretty tasty setup if you buy the pass back over the point of control. Again, depends on how much risk tolerance you have, but that's the idea, right? You're looking for the edge to affirm on the day time frame to affirm what's happening on the daily time frame. And if it's not doing that, then you just don't do that trade, and that's totally fine. So anyway, that's I think the key lesson for me, one of the key lessons. But for this guy on for 528. I tried the ESPY first on the 28th because it was a gap, right? So on the 28th, we're looking at it like this. at this day. So it's a strong open after a strong day already. And if we open pretty much right at the value area low of this key local 3-day supply. So if these buyers were going to press the issue here, they should be trying to get here, right? This should be their objective. So I was willing to buy the strength. I bought the pass back over the open for the ES and then chopped it up under the overnight high. So that's just here. Let's see here. That's here. The open was here, right? And so, all right, well, what's happened here on the open is you just come in and you back test yesterday's value area high, you hold it, and so buying that pass back over was dirt cheap. Few points, and the overnight high, I forget where the overnight high was, but let's see, 528. It's over here. The overnight high was over here. Yeah, overnight high was over here. So you just buy that, move back over it. It was decent, like 1.5 R or something like that. 1.4, 1.5 R, whatever. Chopped it up, stopped out the rest. Here, stopped out the rest here. And I said I was looking for the overnight high. Went with the ES because the NQ was close to daily resistance. So I figured if the ES was going to stay strong, then the XLV and XLF should take over strength. We didn't see that. And eventually I just stopped out the rest. I was looking for that daily point of control test. Chopped at the overnight high, waiting for a lower high play for RTY sell. So I'm thinking ahead to what I would like to do against the ESL if the buyers fail here. If the buyers fail here, I don't really want to join the ES sellers because again, the daily time frame is very strong, but the rut would look like this on the 28th over here. So I was much more inclined to be a seller in the rut because we were just testing this overhead supply over here. And if we were to roll back down under this value area high, the 3442 value area high, then I have very clear targets to try to get to here, try to get to here, you know, to here. Okay. Rather, yeah. So to get to the point of control, to get to the value, well, gap fill, and then the value area low. So I was much more inclined to join the RTY sellers. So I note that it was a failure, right? They did not tag the 516, 520 point of control after getting very, very close to it. They got super close to it and they could not touch it. That's a very notable failure. Whenever something gets really close and then fails, I always take note of that because it's like getting to the 1 yard line and then failing. It's like not a good look, right, for the offense here. Like I guess constantly driving there and getting stuffed. Okay, so I stopped the rest of the ES and then let's see, interested in flipping to the sell for the RTY, playing back to the 3442 point of control if drilling the 15. So I'm calling out ahead of time what I want to see before I take that play. I think it makes a lot of sense to think through the entire play. What was the key idea that I wrote? To flip. Okay, yeah. So you want to just kind of know what you're gonna do ahead of time, right? It's just easier to get all that planning out of the way. Okay, so I'm just waiting then. 15-minute price lower that takes out demand from yesterday and then look for a lower high against the prior demand that would be acting as supply. So I wanted to see this, right? I wanted to see, again, that's on the 28th over here. And so I wanted to see us take out this guy, right? And then essentially look for a back test play. All right, I want to take out this, take out this guy, right? And then make enough space for a back test play against this guy. I don't think we got the back test play, but I just ended up doing a deep Deepak move, I think Deepak sell. Let's see. So so pass back under the overnight low, right. So in the overnight low on the 28th was over here. Hang on a second here. Uh, 28th is over here, and the overnight low is right here. I'll just take one of these lines. That's the ONL, and so we were really, really far away from that supply that I wanted to play against, but the overnight low was being problematic. So at 1106, it was dirt cheap over here, right? Sell that, pass back under the overnight low. I think I just did the SS break, and the stop for was over 84. and I was just looking for a test of the low of the day. I chopped at the low of the day. Oh, I'm sorry, at the at the lower low that didn't see initial follow through. So that was just this guy over here, right? This guy right here. So this was the move down. Here's the ONL. This lower low did not. I'm sorry, it's this guy. This lower low did not see follow through, right? And then we rallied to the ONL. You sell that SS break, chop it up here. Why? Because if these buyers are going to play defense, it should be here at this lower low that didn't see follow through. It's very similar to like a inverse head and shoulders psychology. It's exactly where they have initial defense. So it chopped it up there. Very, very good R for that. And then I was out the rest of the RTY sell at the 3.4 to 4.2 point of control. It was pretty much the low of the day. Right, so here's the 28th, and you can see the low of the day was pretty much at that point of control again. It's pretty much the same trade that I did back here and over here. It's like again, it's like, you know, you're just looking to play from daily level to daily level, right? If you fail at the value area high, they should try to get to the point of control. If you fail at the value area high, they should try to get to the point of control. So on the 28th over here, we sold that pass under the ONL. They should try to get here. It's practically the low of the day. So that was it for 28th. So again, the key idea, in my opinion, was really just to think ahead to know, so allow your context to give you their directional bias. So for the rut, the context was rejection from this value area high and rejection from this supply. That gives you the bias of a seller. From there, from after you have your directional bias, now you choose your tactic. For me, I wanted the tactic to be a sell against this structure, right? Against this guy, we don't get that, but we got a really cheap setup against the overnight low. And I know that they need to hold against the overnight low to affirm the overnight sellers and have the most confidence in day plus selling, and we have a lot of space for 15-minute lower high. So I think that was a very reasonable sell over there. And then after the your context leads to your bias leads to your tactic leads to your R. If your R is good, then fire away, right? So that's essentially it. I've been saying this a lot lately because I think it's a very succinct way of putting together like how to think about the trade. Anyway, the next trade was on 529. So the key idea for me on 529 was that like I kind of need to focus more. A lot of times I'm like talking to people or whatever, explaining something sometimes, or just shooting the shit, and I just end up missing things, and that's just not good. I'm just not being sharp. So the key idea is like if you're going to operate in the day time frame and really capture all the opportunity that's available to you, you you know, surprise, surprise, you need to focus. And on the 29th, I let two things distract me. So for on the 29th, I let the QQQ strength distract me, right? The gap up, I was like kind of eyeing it, seeing, okay, well, are these buyers going to hold it? Maybe I'll do something there. If there's buying later in the session, I mean, early in the session, then maybe I'll make a play later in the session. And like even saying it out loud, that's kind of silly. Why was I focused on that, right? I know I'm looking for something later in the session because it's just a large gap up. I didn't really want to play for a gap and go in that context. So, however, on the rut was like a perfect sell again, right? You opened up right under the value area high, right, of this structure, and then you moved right to it. And then you roll back down under the open, essentially affirming this rejection. All right, so here's the open on that day. You move right there. This is essentially the setup that I wanted yesterday, right? But I wanted to sell off of this guy, if you recall, right? And so that's basically the setup, right? It's the same exact setup, and I just missed it because I was just chatting. I forget. And it was super low risk, and it went rerun right to the point of control. Man, that was such a sick setup that I just completely missed because I was just being chatty, I think. So here, even just playing to the even just selling this. I'm playing back down to, oh, I'm sorry, here, even just playing back down to, like, even with late entry, playing to the yesterday's point of control, stop over it, that's 3.7 R. And that's like 10 points, just so swiftly. So that was just a big old error on my part. Is what it is. What can you do? And whatever, I'm just kind of talking about how I shouldn't have done that. Essentially, it was the, and then later I'm thinking, okay, let me recycle the RTY sell against the ONL if they drive down again. And it would essentially be a test of the high of yesterday's balance, which is this guy over here, right? This guy. So I know now that we've rolled back down under and come back into this balance, the sellers, if they want to continue to affirm this move back down into here, they should defend this structure, which is exactly what they did. And I fumbled that as well because I think I was talking again. Yeah, I missed it when I was typing, and it was like, again, a low risk setup against the high of balance from yesterday. missed it. And then finally in 11:30, I got focused and I sold the SS at 11:31, the stair step break at 11:31, and that was because, hang on a second here. Yeah, I gotta kill these old overnight lows here. 11:31 on the 29th. Let's see, that was here because we had just crawled higher, right? And there's a straightforward SS break play over here, right? Just you see 1 minute stair step, one time framing, whatever. You sell that breakdown. It's essentially a rejection from this opening range and from yesterday's point of control. Yesterday's point of control is right here, right? So very notable rejection from there. And I looked for an exit, I think at the depot, I forget. Pass back under yesterday's point of control. Looking for a PDC for a chop. I forget where the PDC was, but let's see. Bit of wiggle. At 11:32, we took the exit. So that's like over here, somewhere over here. So like 3R, almost 3R. I think that's really solid R, IMO. And then I was looking for more out of the regular trading hours low. Just acknowledging that I almost missed another one, typing it out. And I was out more at the regular trading hours low. And then I stopped the rest of it at the end of the day on this move up. And they did take it lower, but it is what it is. My stop was over this guy, and I got taken out near the end of the day. And you know, whatever. If I miss, I miss. It doesn't really bother me. But you know, the idea is you got to stay focused if you want to capture these trades. Sometimes I miss things because I'm typing to somebody. Like I think on this one. At 11:32 one, I was answering a question, like I think in great depth. I think. Hang on a second. Let me see here. Uh, hang on. Let's see. On 28th. Wait, was it 29th actually? 29. Let's see. I think I was talking to Alex about, I was explaining my process. Yeah. Yeah, I was explaining my process to Alex at this time. So we had a member ask a question about my setup. And so he starts asking me questions somewhere. Here we go. He started asking me a question, and then I just started typing out a whole bunch of stuff to explain it, talking about how I put it all together, chart by chart or whatnot. And then I almost missed it talking to Alex. So if you're interested in, you know, hanging out with us and talking charts like that, nerding out, going really in depth, I like to, you know, I obviously I enjoy talking about my process. I like sharing the ideas. If you're interested in that, check out the Chart Guys chat room. Links in the description below. And then on 5:30, I just you know, whatever, I was just wrong, so I can walk you through that as well. It's not that I was wrong per se, but I was trying to look for essentially affirmation play again. I didn't create the post because who cares, right? It's a stop out anyway, so why would I make this up, right? So I was just looking for a sell over here on this big rip up. I was looking for a sell against this structure because if these sells are going to continue to affirm the rejection from this daily point of control, then they should, this is essentially a proxy for that. So I was looking for a sell here and I just stopped it out. Is what it is. Broke a very long streak, so that's kind of a bummer, but whatever, that's trading. And I have no problem with that, right? Because this was, in my opinion, a reasonable stop. The only like adjustment that I think maybe I could have made was a contextual adjustment. Tactically, this makes a lot of sense. Trying to look for the sell over here, I'm fine with the entry that I took. I actually took 2 attempts at it, and stopped out both. I'm fine with both though. I think they were both very reasonable. I wasn't expecting a V shape to take this guy out. That was very notable buying. But the one thing that maybe could have helped me stay away from it was the incomplete cap fill, right? If I put more weight on that, then you know maybe I would have not been so gung ho. But this felt like enough space, you know, for these sellers to at least make an initial defense, which I guess they did over here. But they just didn't do it. So it is what it is. I have no problem with that. So anyway, that's pretty much it. Appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.